Today is March 17th, 2026, and Rocket Lab USA stock, ticker RKLB, just had a huge day. The stock jumped 10.21% during regular trading hours, closing at 78.59. And if you zoom out, the momentum is even more impressive. RKLB is up 311.47% over the past year and an incredible 556.46% over the past 5 years. So what's driving this massive move today, and what's behind the longer-term surge? Starting with today's jump, there are a few key catalysts. First, Rocket Lab announced important progress on its next-generation Neutron rocket, including successful qualification of major components like the Hungry Hippo fairing and thrust structure. This is critical because Neutron is expected to be a game-changer, moving Rocket Lab into medium-lift, reusable launch capability, putting it in more direct competition with larger players. Second, the company highlighted a major $816 million contract from the U.S. Space Development Agency to build 18 missile defense satellites. That's a huge validation of Rocket Lab's growing role in national security and defense. And third, there's broader market sentiment. With increasing speculation around potential SpaceX IPO, investor attention is flowing into the commercial space sector, and Rocket Lab is one of the few pure-play public companies in this space. Now, looking at the longer-term surge, Rocket Lab has been executing extremely well. Its Electron rocket has become the world's busiest small-lift orbital rocket, achieving a 100% success rate in 2025 with 21 launches. That kind of reliability builds trust and recurring demand. At the same time, the company has been rapidly expanding beyond launches. Its space systems segment is now a major growth engine, winning billion-dollar contracts to build satellite constellations. Strategic acquisitions, including companies focused on optical systems and laser communications, have further strengthened its capabilities. So what exactly does Rocket Lab do? This is no longer just a launch company. Rocket Lab is a fully vertically integrated space company. It offers launch services through its Electron rocket and is developing Neutron for larger payloads. It builds satellites and spacecraft components like photon and lightning buses, solar arrays, and star trackers. And it even provides on-orbit operations, including mission software and control systems. In other words, Rocket Lab can build, launch, and operate space missions end-to-end. And that's a big reason investors are signing at a premium valuation. Speaking of valuation, let's talk about analyst expectations. Wall Street has turned increasingly bullish on RKLB. As of March 2026, Bank of America has a price target of $120. Morgan Stanley is at $105. TD Cowen at $100. Roth Capital at $90. And Cantor Fitzgerald at $85. Longer term, Citi project that Rocket Lab could generate up to $2.6 billion in revenue by 2029, largely driven by regular Neutron launches. But here's the catch. The valuation is already very rich. Rocket Lab is trading at around 32 times estimated 2027 sales and about 25 times 2028 sales. That's extremely high compared to traditional aerospace or defense companies. The company does have over $800 million in cash, which gives it runway to invest in growth, but it is still operating at a net loss. So is RKLB still a buy? Most analysts would call it a speculative buy. The bull case is compelling. Rocket Lab is arguably the leading publicly traded alternative to SpaceX, with a backlog of about $1.85 billion. Around 65% of that backlog comes from government and defense customers, which tend to be more stable and long-term. And about 37% of that backlog is expected to convert into revenue within the next 12 months, providing strong visibility. There's also the advantage of vertical integration. Because Rocket Lab builds the satellites it launches, it can capture more value across the entire mission stack. The company has already reported GAAP gross margins around 38%, which is quite strong for this industry. However, the bear case is just as important to understand. A lot of the current valuation depends on flawless execution, especially for the Neutron rocket. Any delays, or worse, a failed inaugural launch expected in late 2026 or early 2027, could trigger a significant sell-off. There's also ongoing cash burn. Developing Neutron and scaling production requires heavy capital investment, and the company is still generating negative operating cash flow. And of course, competition remains intense. SpaceX continues to dominate with its Falcon 9, and there are multiple emerging players in both the small lift and medium lift markets. So overall, Rocket Lab is a high-growth, high-risk, high-reward stock. If the company executes well, especially with Neutron and its expanding defense business, there could still be meaningful upside. But investors need to be comfortable with volatility and the possibility that expectations are already very high. Thank you so much for watching. If you found this video helpful, please consider liking the video and subscribing to the channel for more stock analysis and investing insights.